Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the weekly preview. Today, we're going to really set the stage for what to expect over the next 5 days of the markets. We're also going to go over a few trade ideas. We've got a trade update on a U.S. oil trade that we put out about 11 days ago, and that thing has worked absolutely beautifully. We're also going to talk a little politics. I said we were going to talk some politics this week. I'm going to ease into it because we have shifting winds. We have shifting poll numbers. We have a lot of things happening in the U.S. presidential election that are going to impact commodities, stocks, probably not monetary policy because the Fed has a mind of its own, but we have a lot of things really developing here that can bring us some good trades. Today, though, before we get started, I want to say that it's the Columbus Day holiday in the United States. So even though the U.S. markets are open, the stocks are trading, I would say that in some arenas there's a little bit, I would say, lighter liquidity. That's what I would say, but I still think today's tradable. But for me, it's going to be a very, very slow day. Just like last Monday, I'm not in any hurry to jump in here, and I'm not in any hurry to try to get after it and make a fortune today. I know we've got a bunch of entrepreneurs in here that are the next James Vanderbilts, but what we've got to do is we've got to be careful not to go in a hole today. So I want to say welcome to everybody. Jay Ski, good to see you. Mark Corp, hi Shane. Did you have a good weekend? Yeah, University of Montana Grizzlies pulled one out against Northern Arizona. They won a home game, so I was happy about that. Didn't cover the spread. I wasn't real happy about that. Didn't play very well. But you know, a W is a W. On to the next week. So yeah, I had a pretty good weekend. Not bad. A little bit hoarse. You have to yell for that defense more and more. Never used to have to do it as much, but we're into the season now. Bobby Bob, good to see you. So yeah, good weekend, Mark Corp. Hope you did as well. Dibble, always a pleasure, Dibble. Ivy, good evening. Shane from Thailand. I'm just kidding. I've heard great things about different areas of Thailand. There's a lot of expatriates from the United States that moved to Thailand just because it's got pretty good weather. It's hot. It's easy if you have arthritis. It's easy on your joints, and also some absolutely beautiful beachfront land there. So good evening from Thailand. Welcome. All right, everybody, let's get right out. Let's get right out to price action and take a look at what we've got going here in the U.S. oil market. I was watching U.S. oil very closely because over the weekend, anything that happens geopolitically is going to be a bullish market driver for U.S. oil, specifically in that Iran situation, in the Israel situation, also the Hezbollah situation. So about 11 days ago, we issued a trade recommendation. I'll show it to you right here. And what we wanted to do is we wanted to buy the oil market. We had this one in, like I said, about 11 days ago. This goes out in your email. You get these email blasted to you every day. If you follow the trading coaches inside of the trading room, if you're interested in that, just go to the trading room, How to Trade, and go ahead and follow us. Also, if you're in the trading room, the market analytics can definitely help you. Matthew, good to see you, Matthew. In any case, this was just a bid. I mean, we're talking about bidding 72, 75s, and it worked like a charm. I'll get back out to price. This was a monthly level, sort of looking to get long on what's been a fairly bullish month here. We were looking to get long right above 72.62. And once again, this thing came out about 11 days ago, and I wanted to highlight it again because it was a pretty darn good trade. So right in here, this is what we were talking about, basically buying a pullback. And you sort of saw right there was your low, 73.49, but then you got the big pullback there, back down to 72.75. Beautiful bounce right there to 74.41. Now, I realize that's a daily chart. Still very good stuff. Still very good stuff. This area, we sort of knew it was going to be robust support. Remember, when it was top side resistance and we take it out, then we just move higher, we pull back. That resistance zone became support. Loved it. Still think it's support. I would be watching that area. That's 72.60, maybe 72.75 is worth another shot. It wasn't the worst trade in the world. As a matter of fact, it was a darn good one. We've seen bullish price action above 72.69, so I expect that to be the case here as we roll deeper into the trading week. Not a whole lot out there for U.S. oil this week. EIA inventories are going to be Thursday. We're going to go over that in just a second, our trade expectations, because our economic calendar is sparse. And I like a sparse economic calendar. It means that potentially we're going to have some opportunities to trade unfettered price action. And that means that the market's going to behave how it behaves without a central banking entity or anybody getting involved to really shake things up until Thursday in the euro. We're going to talk about that as well. Right here, though, if you are trading the U.S. oil, CFD, this is a monthly chart. We talked a lot about 77-ish. Pretty darn good sell from right up there. Again, we're looking at 80.38 as being a great sell, and I would be a bidder from down here at 72.62. Now, as far as intraday trading goes, I would go right down to a 30-minute chart and say, okay, what do we have here on the 30? Not much. Not much. I would be very careful trading crude oil today. If you haven't already made your money, as today goes on, remember it's sort of a bank holiday. So even though we're seeing some action, some bids hitting stocks, what we are also seeing is sort of rotational conditions, especially for about the last hour and a half out of U.S. oil. I would be very careful. Keep a close eye on that intraday low. That happened during the London session, right around 73.37. Potentially, we could get a washout under there, wash out the intraday longs. But for me, I'm sort of on the sidelines with crude oil today. Not real interested to dive in with any liquidity, or at least provide any of my liquidity to the market. We see Marcorp chilled over the weekend. Right on. Beautiful weather here. Absolutely beautiful weather for Montana in October. Very, very pleased with that. But it's got to start raining and snowing, and it's coming soon. I got a feeling. Volumes dropping off big. Don't be surprised if we don't get much of a resurgence at all in U.S. oil towards the end of the U.S. session. So remember, if you want to trade WTI, crude oil, let me see. Marina Tucker, happy Monday. Happy Monday to you too, T Marina Tucker, right on. I hope everybody's doing well. We're going to talk a little psychology here and set the table. Remember, if you need a place to trade, Switch Markets will match your deposit up to $5,000. Check it out. Be sure to cruise over there. And if you're interested in maybe you got a few $100 to put in there, maybe you make it double your purchasing power up to $5,000. Pretty good deal. Let me see, Bobby Bob, W strategy on 30-minute time frame in WTI. Good observation. Let's go ahead and we'll go back that visit there right there. Yeah, I mean, it really just depends on when you want to enter. I can already see almost two W's, Bobby, but good eye. Definitely a good eye. Bollinger W is a strategy we have here in the trading room right there. That would be your break. Your break down there. Boom. There's your first bottom. There's your pullback. The real question is this that going to be your second bottom, and is that your buy, or are you still waiting for this as a pullback and maybe a green candle? Sort of buyer's preference. I think you're going to be okay either way. Just be very, very careful towards the end of today's session with U.S. oil. It certainly could dry up, and sometimes when oil when oil volumes dry up, it can be very, very difficult. Let me see. T. Marina Tucker, Shane, do you live down the road from Yellowstone National Park? It's about 2 hours that way. So we are down in southwest Montana, and we're not too far. We're a few hours out of the Grand Tetons and also a few hours out of the entrance to Yellowstone. Actually, it's just right over there. So, yeah, I could be in Yellowstone Park in about an hour and a half if I drove real fast. But we're on sort of the west side. So we're on the west side of that in southwest Montana. So good question. Good question, Marina. Pretty country if you've ever been there. We're not too far from Earthquake Lake if you've ever seen that. That's an amazing geological thing. That's for sure. Wow. Yeah. Yeah, it gets cold here though. 41 below last year. All right, let's do it. Let's set the tone for this week. Remember, I mean, we're running out of weeks in the calendar year, and that's okay. We're getting on into the holiday season, and we got about another, I would say, month of absolute premium trading this year, and then things are going to get a little bit sparse. That is awesome. Thank you, Marina. thanks for. And we like it here. We certainly like it here. We moved back from the city and haven't regretted a minute of it. Absolutely love it. Rodeos and college football. It's a lot of fun this time of year. In any case, what do we have? Columbus Day is today. You're going to have lighter liquidity. And then you've got Tuesday, Canadian CPI. That's going to be our big mover and shaker for tomorrow. We're going to be looking at the CAD. The CAD dollar, we definitely want to look at that loonie and see if we can maybe pick off a good trade after that volatility that it will hit during the U.S. pre-market on the Canadian dollar. Wednesday, UK CPI. We're going to be focused sort of on the Great Britain pound there. We're going to be looking at some pound issues. Not much going on Wednesday, though. This is a very light news week. Nothing today. Tomorrow, Canadian CPI, sort of a peripheral type of an event. And then also UK CPI doesn't really drive the pound as much as US CPI drives the US dollar. Now we've got Thursday EU CPI. That's going to be interesting, but the ECB announcements is the number one event this week. ECB announcements, we're expecting rate cuts. We'll talk more about that during the midweek, but you're definitely going to want to be trading euros on Wednesday and Thursday. We're going to be watching that as well. And then Friday is a textbook no donation Friday. I mean, there is nothing out. We're going to spend Friday counting our money and talking a little bit of theory. Maybe we'll do a strategy session or maybe some sort of webinar there. Remember, Monday psychology, at least for me, primary objectives to trade to the positive. I don't want to go into a hole. Today is not the day to take a big risk. It just isn't the day to take a big risk, so I'd be very careful. We want to trade to the green. That means taking some small profits, start trading with other people's money as fast as you absolutely can. At least that's my mindset and my strategy on a Monday. If I trade at all, I'm looking to take smaller profits. I'm looking to get off on the right foot for the trading week. Now, I'm focused on analytics. We're going to game plan for the week ahead. Right now, we're going to look at the E-mini S&P 500. That is making the big news today. And then we're going to look at the Great Britain pound, Japanese yen, really a great level coming our way there. And then also you've got gold. It's not a party without gold, rotating right around 2650. I'll sort of set up my anchor points for the week as well. Generate momentum on a Monday. Trading's all about momentum. You've got to be able to weather the bad days, weather the storm, and then you've also got to be able to get going. We're trying to get off on the right foot. I don't want anybody going into a huge hole today, because if you go into a huge hole today, more than likely you're going to be tired and beat down going into when you really need to be energetic and ready to trade. I would much rather see everybody focus on Tuesday, Wednesday, and Thursday, going hard on those days, as opposed to trying to gut out a few bucks on a Monday. That being said, one rule on this stream: if you're making money and it makes money, it is the right answer. I won't debate that. I'm not interested in trying to argue about, well, my strategy works or this works or that works. If you're making money, you don't let anybody tell you what to do. You keep making money. That's the only rule. The answer, the thing that makes money is always right. That's it. We're traders. We make money. That's the bottom line. Right here, all the traders that bought into that E-mini S&P 500 are definitely loving today. I mean, today's another big day up, almost 0.75%. I'll tell you right now, I took wasn't really a major hit, but I took a bigger loss than I wanted to last Wednesday on a trend day that I didn't think was a trend. And we did. We broke above the previous week's high. We had a spike high there. And since then, it has been bullish for U.S. stocks, and we are just cracking all-time high after all-time high after all-time high. I bring this up because this E-mini S&P 500 is a futures contract. This is the December contract, so we're pricing the S&P 500 for what we think it's going to be in December. Remember that with futures. We always price what we think it's going to be at a specific point in time down the line. We don't necessarily price what we believe it's going to be today. Those are spot markets. These are futures markets. Well, for me, I take a look at the E-mini S&P 500, which is the most, the heaviest traded futures contract in the world. Pretty much everybody trades the E-minis. It can be very, very good. It can also be very, very cruel. But if you have a nice, solid strategy, you can do very well trading the E-minis. Now, big day today. We're sort of getting up above that upper Bollinger Band. In my view, we're going to 6,000. I would be surprised if we don't go up and check the water at 6,000. I'm not even really interested in selling this thing for another 100 points. Right now we're printing about 59.03, and we're in all-time high mode. One of the things we pointed out last week with this was buy retracements. We're looking to get long, get long, get long. There was sort of our pullback. We didn't really get a full pullback to our 38%, so we probably couldn't have got long there. But for right now today, what do we want to do on an intraday basis? The trend is on. There's no two ways about that. Right there's your opening bell, ding, ding. You can see that as a beautiful pullback and one that paid a lot of pullback traders a lot of money. It was relatively easy to see. Nice negative bar. Boom. Traded down a little bit of a doji, and then we broke. Okay, so right there from your U.S. session, you had a nice retracement to 50%, and then you went right up. I don't trade 50%. I scalp 38s and 62s, 78s as well. But now look at what we have going. Now, there's a couple of ways you can build your Fibonacci's for the E-mini S&P 500. If you're trading the U.S. session, I highly recommend always understanding what we've done during the U.S. session, meaning you could always build your Fibonacci's based on a time sequence, meaning you could go from the session low to the session high. Now, that's sort of what we have right here for you. Right there, you'd be looking at 58.94. I think that's a pretty darn good level. Why would we focus on the U.S. session? Because of volume. Volume. It's what makes the markets go. Traders have to trade for the market to move. And take a look at what you got there. Pretty solid volumes, but they are tapering off in a big, big way. So if, in fact, you wanted to be hyper-aggressive and trade the E-mini S&P 500 right now, I want to make my mistakes to the top side of the market, meaning I want to buy this thing. I don't really want to sell it. And the reason why I don't want to sell it is we're fighting a pretty stiff trend, intraday trend, and also, our volumes are drying up. So the idea that I'm going to sit there and say, okay, I'm going to try to sell. Well, if I'm going to sell against a trend, I'm going to need other sellers to join me, or else I'm going to lose. So for me right now, I would be buying pullbacks. Would they be pullback scalps? Yeah, absolutely. So this one right here would be the most recent spike to spike. Very aggressive trade. There's your swing low. There's your swing high. We're still playing that bullish trend, which we should be doing. But you really have your choice of saying, hey, maybe I want to take 38% of the U.S. session or the current wave. Let's see if we can place a real tight scalp right here. 5,900 and a quarter. Let's go down. Let's go right to our order. I want to go ahead and put a limit order, a buy, and I want to go 590. Can't talk today. 590. 75. That's what I want to do there. Let's go ahead and risk, let's say, I don't know, we want to go 4 lots. We want to go maybe 8 ticks. Let's go 8 ticks, see if we get with a take profit. And then my stop loss, I'm also going to put down for 8 ticks and see if we get a chance to maybe make this trade. So I'm going to go down and put my buy limit in the queue. And all right, we are all lined up. We're all lined up with our order. You'll see it right here on our trading dome. So when we get down here, if we do get our retracement, I want this trade right now. I don't want to mess around with this in an hour or an hour and a half or anything. I want it right now on this price bar. If we get that retracement, we'll have a chance maybe to take a nice position and make a few $100 here. Remember, demo dollars, the black DOM right here, TradingView DOM, that's demo. When I bring up the white DOM, that means we're trading real money, okay, my own account. So something like that I think could be very good for us. Do I like this trade as being a slam dunk? No, I don't. I really don't, and a lot of it's because of the decreasing volume. However, I'd love to join trends. The trend is your friend until the bend at the end, but the trend is your friend, and right now, I'm not sure that we're done going up. I think that we still have more range to make to the top side. Would not surprise me at all if we go over 59.10, 59.1250, somewhere up in there. So to get that pullback right now, it's pretty good. And remember, if somebody comes in and sweeps this market lower, we take our loss and we move on. Nice one-to-one trade. Let's see if we can get it. Don't commit too much money to that. We don't want to lose a bunch on a Monday. All right, so what's the big story today? The big story today really is the S&P 500 hits the record to start the week. Traders start looking to key earnings. Remember, when we don't have a huge news week, when we don't have CPI, when we don't have the Fed, when we don't have jobs numbers, what do we really start looking at? Stock traders are going to look to individual earnings releases. So, if you're serious about trading the indices, you're probably going to want to look at some of these earnings releases because they can sway the entire index. Now, we're going to sort of wait and see exactly how things unfold this week. I'll start talking maybe a little bit about individual stocks tomorrow. But as far as this week goes, I think you got a great opportunity to trade unfettered price action. And that makes our job real easy. We show up in the morning, we identify the trend, which markets are trending, which aren't, and then we look for our trade locations, and then we trade them. It's that simple. Keep it simple. It's the old KISS. I subscribe to the KISS method of thinking. Keep it simple, Shane. That's what I do. Keep it simple. But as far as your headlines go, Harris really starting to struggle in the polls. I wanted to focus on the presidential race today because it's a good day to do just that. Take a look at some of these numbers from Polymarket. Now, this is the biggest betting market as far as politics on the internet by far. You've got over $1 billion in volume on this market. This is a big market. So one of the reasons why we're talking about this today is we've seen over the past several days a major shift in the betting odds. Harris was favored most of the last 6 weeks, really since she entered the race. Now, we've seen that flip. Trump now has a sizable edge, about 55% to 45. That's as big as that edge has been in a long time, really going back to when Trump was involved against Biden, realistically, right after that switchover, right before that switchover. So we're starting to see our expectations switch towards the U.S. election. And you can see right here, this chart right here is one that we are going to be looking at a lot. These are the top battleground states, the RCP average. The reason why we look at these is to try to figure out who's going to win the election. Now, I'm not going to break down the American electoral system for us because if you're not from the United States and you don't know about the Electoral College or how delegates vote in primaries and all that stuff, I'm not going to give a civics lesson here for an hour. But what we are going to talk about is the markets and how are they likely to react to the next president of the United States. I'm not going to speculate on that. What we're looking for is uncertainty to leave the table. Now, right now, most people believe this thing's a coin flip. I'm starting to see signs that Trump is opening up a significant lead. And the reason why is if you look at the history, the polling data history, when Trump's involved, typically they miss to the downside of about 5 to 7 points. It happened in 2016. It happened again in 2020. Now, we can talk about how the media polls and who answers polls and all the different things. We can do that. That's a fact. These polls typically underestimate Trump's performance. They have historically in the last 2 elections. So when I'm starting to look at red across the board, Trump ahead in Arizona by a point, up a little bit in Nevada, down, but it's close in Wisconsin. Michigan up. That's the one that's really scaring a lot of the Democratic backers right now is these numbers out of Michigan and Pennsylvania. Those are pretty much must-win states. And North Carolina and Georgia are also fascinating. So pragmatically, these are all within the margin of error. Okay, so typically we could say, sort of a coin flip in each and every one of these battlegrounds. But here's the thing. This switch right here, Biden withdraws. You can see Trump had a big-time lead. Biden, they switched it. Harris has taken the lead really since the August, really middle of August, I would say. And now you're starting to see this thing flip with only about 2 weeks left, 2 weeks from tomorrow or 3 weeks from tomorrow until your election. That's big. That is big. So when I'm watching this stuff very closely, remember, just off the top of your head, Trump's going to be bearish for things like WTI crude oil. Why? You're going to produce energy. I would look for natural gas and crude oil to both go down in the event of a Trump victory. As far as Harris goes, Harris is going to be the opposite, going to be bullish for those fossil fuels. Why? Because you're going to cut production and really gravitate towards some of that green energy stuff. I put out a piece on copper. I'm going to try to find the link, but I really wrote out a long analytics of copper. A Harris win would be big for things like copper and silver because that transition to green energy, things like electric vehicles and windmills, that takes a tremendous amount of conductors. Copper is going to be one of the biggest. So our commodities markets are watching this election very closely. Now, as far as equities, I don't know about that. I would say that in either way, I can build the case for bearish equities over the next 12 months. The real question is when do we get in and try to pick the top? We're not there yet, but we are getting there. This right here is a good look at your map. If you're looking at no toss-ups, just going by those real tight margins, you'll see Trump and Vance win big, 302. But if you go with the toss-ups, basically there's 104 electorates that are in the toss-up mode. That's going to be where the election's won or lost. Places like Georgia, North Carolina, Pennsylvania, those are going to dictate who wins the election. But you can see there's several states out there that are definitely in play, and a lot of that is going to come right down to the wire. So we're watching that closely. Remember, uncertainty is the biggest thing out of the U.S. election that we really sort of say that's going to drive your markets. When people don't know what's going to happen, they don't spend money and they don't invest. And right now we're seeing a lot of investiture in the market. Maybe that's because the picture's becoming a little bit clearer on the winner and the way forward politically here in the United States. I don't know. We got to wait and see. Right here's our bid order. We're still sort of hanging tight, about 8 ticks down there. I'm going to tell you from experience, I don't like the way the DOM is moving at all. It is very, very quiet, and that tells me that there aren't many traders in there right now, relatively speaking. So watch that E-mini trade closely. This is one that we talked about a lot last week, and this was brought to my attention in the live chat on one of our live streams. And I sat there and I said, wow, the Great Britain pound, Japanese yen is rocking and rolling. Now, a few weeks back, we talked about that hammer. This is a monthly chart, all right? We talked about that hammer right there. That hammer formation signifies a major sell-off, and then the bidders step up and win. it's an exhaustion pattern. So when you start to see things like hammers form, even on your short time frames, those are exhaustion patterns, and that's what happened here. Bang, we were saying you could probably go long and get away with it. The problem is how do you design the trade and make it affordable? So we've done a few ideas since then on how to get long. I want to be long this market. I don't want to be short. I want to be long. And you can see right there, you've got another bullish month of about 2%. If I want to be long, does that mean I can't take shorts? Of course not. I can scalp to the short. I just have to watch my risk and make sure I don't get my lunch eaten by a market that looks to me like it's going to drive higher. Barring something major out of the Bank of Japan, this type of chart formation, hammer, doji break, that's a really strong, really strong signal that this thing is moving higher. Now, as far as what would I scalp? Well, 62% right there, 197.40. I'm probably scalping right in front of that. Now, you'll notice last month's high, definitely have your eye on that, 195.97. So if you do, in fact, get a break up over 196, odds are you're going to roll up another 100 pips. So if you wanted to play a breakout above last month's high, you could do it. I would just be very careful. Don't get chopped up. A lot of times you see an initial break, and then we get choppy around a key level, and then we finally gravitate towards our topside target after we've been knocked out. I don't want anybody getting knocked out. We got to wait and see exactly how this thing unfolds. But for right now, big bullish month. I would be looking to sell right up in front of 197.40. Nice scalp, probably selling maybe 197 and a quarters. Stop loss, maybe back there up over 59, looking to make 25 to 50 pips. If we want to take a position from there, I don't hate it, but we're going to wait until that level's been violated and we get a little bit of confirmation, meaning maybe we get a daily hammer in the other direction or a hanging man, something like that. Definitely a lot going on here in this Great Britain pound. Okay, how do we trade it right now? First thing I would do on my chart, if I was very serious about betting big money on this thing, I would locate last month's high, 195.97. I think you've got to be very careful right around there, especially if you're holding shorts. I expect a lot of probably retail shorts to get knocked out above there. That's a major confirmation signal the market's going higher. Now, as far as what we can look at right now, is going down to a 4-hour. How do I want to trade this? You can see we're breaking out. Right there, that's last month's high. We've had several tests of this zone. Sell off right there. What was the high? 195.62. What's the high right there? 195.97. So we saw major selling at 62. What about this right here? 195.50. There have been sellers each and every time up. So those areas, those supply zones, those order blocks, smacked. Those are gone now. I would look for this thing to really rally, and if I wanted to make a trade here on this Great Britain pound Japanese yen, it would be a very simple Fibonacci retracement. This isn't a hard trade at all. It's a pretty easy read. What we're looking for right there, spike low, spike high. And if you can actually get this thing to set up and get a pullback, that's what we're looking for. So right there, nice swing high right now, probably going to get taken out, but 195.30 is a bid. More than likely, we're going to see this area really taken out. And if it's in an orderly fashion, then we just adjust our Fibonacci's and just buy that pullback. Would absolutely love to see this market maybe break up there, give us a chance to grab that short scalp, and then buy that area right there from 196. That could be an absolute fantastic trade for the Great Britain pound Japanese yen. Could be pretty good. Now, as far as what I want to get accomplished today is we want to make a little bit of money, but we don't want to take a tremendous amount of risk. So I would say on a Monday, pick your favorite market. Keep your risk minimal, meaning 1 to 3% on a trade. There's no hurry. Now, we've got 5 days to make our money. And realistically, if we haven't made our money by the end of Thursday's session, we probably aren't doing a very good job. So the next few days, we should be stacking chips. Now, we're going to talk about all the different things you need to do to keep that momentum going, and we're going to talk about that Friday. But for right now, tomorrow's all systems go. For me, I have no problem being on the sideline holiday session of the United States. I'm not going to, sit around and cry about not making much money today. That's just comes from experience. It comes from having some perspective. This was interesting today. Spike low right there in gold. Pullback right there from those highs. Once at 126.42. Pretty good trade. Do we want to buy right now in gold? It's kind of over. We went up, checked things out during the overnight, and then bang, we sold off. Your low right there was 26.44. Our level was 26.4250. So that's sort of tough. That's a tough trade to get. I would be very hesitant to take that trade just because it's sort of a big risk. I would have had to shade that entry by about $2. That's a lot. So Do I want to buy 2642s, 2642.50? Yeah, I could still do that. Just keep your profit targets modest. You don't want to dive in there and hope to hit this huge home run when the market's probably not going to do much of anything, at least until tomorrow's session. Now, as far as the macro picture for gold, I've been sort of very transparent of what I expect the market to do, and I don't really see any reason why it won't. Remember, markets have memories. I think we're going to 27.50 next. I would not be really interested in selling that market aggressively until we test that zone. Now, as far as what's happened thus far today, we did have a bit of a rally right there at that spike high, and that one was established back on the 26th of September. So remember, that right there is September's high. So if we were going to break out in this gold market, you're probably going to break above September's high and make some more range. So I'm looking to get long above there, even though it looks like we're buying the top. As soon as we get that break, we're going to be looking to buy pullbacks. Now, if we don't get that break, take a look at our weekly levels. Interesting. There's our hammer formation again. That suggests to me that the selling is over, and we're looking to get really some major upward trajectory out of this market, almost like a breakout. Spike low, spike high pullback, 2600s. We talked about that all week last week. I would be looking at that again. If we get a shot down there, 2605-ish maybe, 2607, probably going to be a pretty good buy. Now, what I mean by that, here's your horizontal support level. Support means we're going to look to buy the market. Now, I got this question about our trade ideas earlier today. Shane, your key levels are always different than your Fibonacci's. And I go, yeah, because I'm looking to buy. If I'm looking to buy this market, I'm looking to buy a little bit up in front of my level. Now, not quite that high. I want to probably just shade it a few bucks. But that's where I want to buy. I'm not necessarily looking for an exact hit of that level, because what happens, a lot of times you get compression right in front of this zone. The bidders and sellers will be duking it out right in here. That's the action we want to get on, because eventually all support and resistance levels give way. None of them work forever. So it's our job to say, okay, when do I want to trade it? I love the first time down. We always pretty much trade these things the first time through. Second time can be pretty good too, depending on how the market structure looks. For me, this is absolutely weekly rotation. Nice big rally, flat, hammer. If we rotate down and it gives us a chance to buy it, absolutely. We take that this week. No problem. Absolutely no problem. Now, where do I want to take it from? I would shade that probably $2. I would get right up over 26.05. And the reason why I would do that is I don't want to miss the move. I want to make sure that I get in on that retracement. It's not going to be perfect, but it'll give me a chance to get in there. So that's the idea behind that. Other than that, the game plan for me, at least gold-wise, very, very simple. Pull back to 26.05-ish. Clearly, that's an automatic bid for me. And then also, if we wanted to look at how to trade this thing, if we do break above September's high, which I would be surprised if we don't test the water up there in the next couple weeks, as soon as we break that, I'll be looking to buy pullbacks and really maybe even position ride this thing up to 27.50. And if you could get on the right end of that, that's a lot of money. Something to think about there. All right, guys, let's check in on our 30-minute scalp. It's just not really setting up or coming into play. It's still valid, though. One of the things that I like to do to filter out bad trades, at least with intraday Fibonacci levels, is I go down to my ADR, which is an average daily range, but it's really an average periodic range. And it's a 13-period ADR. And what that is just an average range of the 13 previous bars. That's it. And I look at that and I say, okay, what is it? Right there, our range is about 7.62. So for the E-minis, I'd be looking for a range of about 7.75 on this 30-minute price bar. And right now, what's our high? Our high right there is 59.0350. Our entries down there at 009 or 5,900. So what would that mean? It would mean that if this price bar respects that ADR, and most of them do, you would actually be looking at a draw probably down in here. So is it the best trade in the world right now? Not really. I would scratch it. We wanted it on the last price bar. Markets are very slow today, guys. Remember, this is a holiday session. Even though they are open, still very slow, and that volume keeps drying up down into nothing. Expect that to continue the rest of the day. All right, everybody, I want to thank you for joining me today. Tomorrow, we're going to be back in the saddle. Connor's back. It's good to have him back. So we're going to have a normal streaming schedule throughout the rest of the week. So 2 streams a day. Be sure to check out your trade ideas. We're going to have a fresh trade idea out for you. I believe it's going to be facing the Euro Kiwi. I'm going to put that one out here relatively soon and give you a little bit of analytics. Holiday session. Don't lose big today. We want to be in the saddle tomorrow, Wednesday, and Thursday. That's where we'll make our bones this week. And right now I'm watching that E-mini trade come our way. I would pull it. I don't think I would take it right now. Liquidity's low. I don't know that we get a bounce off our support zone. Dre Day every day. Thank you. No, thank you, Dre Day. All right, everybody. Until next time, Dibble, always a pleasure. Trade the action well, and we'll talk soon. See you.